Welcome to our last show of 2025 here on Dollars and Cents. My goodness, how quickly these years go by. They just keep rolling and rolling. And at the end of the day, hard to believe, here we are at the end of another year. You know, they do certainly go by very quickly. And ultimately, the show itself now entering its 40th year, 40 plus years. Nelson Financial Planning was started back in 1984 by my now late father-in-law, Jack Nelson. The tradition continues today by me, yours truly, Joel Garris. You know, it's interesting. A lot has changed since 1984, but a lot of the financial fundamentals and investing principles of which we follow have not. Certainly what's changed at the office, if you know the office, we have doubled in size, square footage-wise, over at our offices in Winter Park, Florida. The team itself, no longer one person, a total of 16 different people as part of the team at Nelson Financial Planning. And so that certainly has allowed us to really lean into a much more holistic process where every member on the team sort of has an area of experts. You get the privilege of listening to those other folks on the team on a regular basis. If you're a regular listener to this radio program and podcasts, you know their names, and if you watch us on YouTube, you know their faces as well. And ultimately, the goal there is to make sure that when we ultimately sit and visit with anybody, that you're getting sort of the best minds or the best experts that you can on the broadest range of topics. So whether it's taxes, whether it's estate planning, whether it's Social Security, all of those kinds of things are all part of what each of the folks at Nelson Financial Planning has in terms of different expertise. The reality is, of course, what's not changed is some of the financial fundamentals. And I thought it would be a good idea on this last program of 2025 to sort of recap the headlines that occurred just this past year. And I think once again, we have a year where at the end of the day, it was not a smooth year. Certainly was not a smooth year for the markets, although the markets may have ended the year decently enough. But certainly it was not a smooth journey. And I think the important thing to remember on that is that the reality is that one of the most fundamental financial tenets is to be consistent. And I know it is hard to be consistent, particularly when you think about all of the different events that happened during the course of this year. Yet again, just another great example of how hard it is to be consistent, because all of those headlines serve to be incredibly distracting. And so most importantly, to make sure that you maintain perspective along the way, particularly when it comes to your investment strategy. So we thought it would be interesting, as we like to do on the last program of a particular calendar year, to just kind of go through those events just for fun. As I was putting this list together, it surprised me how many of those I had kind of forgotten, and how quickly we forget. The current market headlines of the day seem like they are just the most important thing that could possibly happen. And then lo and behold, tomorrow happens, and you get that all over again. So if we go back all the way to January, we had a presidential inauguration on January 20th. Donald Trump sworn back in for a second term on a non-consecutive basis as U.S. president, obviously signaling a lot of what was going to happen in the year ahead, some major policy shifts, and that certainly dominated the headlines as we rolled through the year 2025. The reality is that the markets obviously started the year quite strongly on a lot of AI optimism. That sort of was the theme at the beginning of the year, and that seemed to be the theme that continued to dominate along the way. The Fed Reserve back in the first quarter of the year was sort of holding rates steady. Obviously, this fourth quarter here at the back end of the year, they have certainly changed their perspective on that. Also, all the way back in January was all those terrible California wildfires, if you remember those. Just absolute catastrophe. At the end of the day, or obviously they're still totaling up the numbers, $61 billion in property damage for those California wildfires. Unbelievable. On kind of the more non-economic, non-financial headlines, the Chiefs won the AFC championship game, and obviously this individual by the name of Taylor Swift made an appearance at the end of the game. She did not play in it, but her boyfriend Travis Kelce, obviously that romance probably dominated the headlines during the course of this year. So those were just the January headlines, if you will. Along comes February, and you start to see some of these tariff moves from the new administration started to take place, particularly targeting Canada and Mexico and China. And ultimately, that started to create a lot of uncertainty in the markets, particularly as that sort of that tariff rhetoric intensified. The Chiefs did not prevail in the Super Bowl. The Eagles won. And then the background is in the month of February, you started to see Elon Musk and Doge start to take center stage. The Department of Governmental Accountability or efficiency was all in the press and all in the headlines. Slide ahead to March, and obviously that's when the tariff conversation and all of that, the escalating friction that occurred as a result of the tariff conversation really did intensify pretty dramatically. I looked this up on March the 10th, our March the 10th podcast episode. So if you want to kind of re-look at that one, it's certainly in the archives on our YouTube channel and on our various podcast platforms. And, that was sort of a classic stay the course. These are dramatic headlines, but these headlines have a tendency to pass. You want to continue to remain consistent. Don't sell your investments. Don't jump out the window. All of those kinds of things, which again, if you're a longtime listener to the program, you certainly know that from time to time we have to remind people of that, particularly when the headlines are as dramatic as they were. And they certainly were. Hard to believe that at that period of time, end of March and going into April, the S&P 500 was actually down 15% within a very, very short period of time, because April, or at least April 2nd, marked the Tariff Liberation Day, where all of those tariffs were kind of set to take effect. I think that was on April 5th, where there was a sort of a minimum of tariff of 10%. Following that April 2nd announcement, the markets all went down dramatically like that very next day, which ultimately contributed to this initial start of about 15% decline in the overall markets. I mean, you'd stop and think about that. You probably have forgotten about that because the markets are much, much higher than they were back then. But at one point, the markets were down 15% since the beginning of the year, in this calendar year. Of course, April 9th, all those tariffs were paused for 90 days, and then the market started a pretty dramatic recovery. So the key point in sort of this conversation about recapping the headlines for the year is that there was a lot going on. There was a lot of uncertainty. And had you made investment decisions based on that current headline, chances are they would not have played out in your favor because those headlines passed. Now, obviously, other things that were happening during that time frame on the, kind of the non-financial, non-economic side, Pope Francis passed away in April. Pop star Katy Perry, if you recall, went to space. Good for her, I guess. That's when consumer space travel became more of a thing. In May, Pope Leo was elected, first North American Pope, first U.S. Pope. And then along the lines in May, there was still some continuing impact in terms of sort of this tariff conversation. That gets us into June, and we're only halfway through the year, folks. So stay tuned with us through the break as we kind of continue this walk down memory lane of the year that was in 2025 here on Dollars and Cents with Joel Garris of Nelson Financial Planning. Since this is the last episode of the year for Dollars and Cents, as we like to do each and every year on the last episode of the year, is we kind of like to walk with you down memory lane and hit some of the headlines that happened during the course of the year, in particular relating them back to how they impacted your money. But also the undercurrent, of course, is that as we go through this discussion, it's important to remember the investing fundamentals. Things like diversification, things like consistency, those won't change and have not changed since we started helping people with their money back in 1984. The reality is that a lot of those fundamental investing concepts stay true throughout the course of any year, but in particular, a year like 2025, where there was a lot of headlines. In the first segment of the program, we were just recapping the first half of the year. What did we have? We had a presidential inauguration. We had a bunch of tariff stuff. We had a lot of uncertainty in the markets, a 15% decline in the overall markets during the course of sort of February to the beginning part of April, and then a big sort of change in sentiment in April when all of that tariff conversation was suspended. Fast forward to June, and if you remember June, that's when we were dropping bombs on Iran, and the Israelis were as well. Certainly some significant escalation in the tensions in the Middle East. And at the end of the day, that only gets us halfway through the year. AI, artificial intelligence, continued to be a dominant theme throughout the course of the year, in large part drove that recovery that we saw in the second quarter that allowed for a full recovery of the market decline during the course of the first quarter. So if you kind of folded up the tents and said, forget it, I am ignoring everything at the end of the first quarter, you would not have realized that there was a full recovery in the markets that happened in the second quarter, just that quick. Again, further highlighting the need to be consistent when it comes to your investments. Of course, if you're diversified, it also helps to really make sure that you can weather through that volatility even better. So two key concepts that won't change ever when it comes to investing and preparing yourself for your financial future. July marked probably the most significant legislation that came out of Washington. The one big, beautiful bill signed into law by President Trump on July 4th. A lot in it, but a lot not in it, I guess would be how we would describe that. Obviously, as we think about our summer shows this past year, we're very heavy on kind of digging into the details of what that bill had in it. As we look ahead to next month, January and February, and as we approach tax filing deadline in April, you're going to see us talk a lot more about some of the provisions that are in there, because many of them apply to 2025, and certainly that will be the tax return that you are filing for next year. Biggest part of the one big beautiful bill before we move on from that is that it continued the tax rates that were originally enacted under the first Trump administration. So most of the money that was sort of spent with that bill went to just that piece. So if you're thinking that you're going to see big changes on your taxes, not really the case, because most of it had to go to just kind of continuing on what the tax brackets were from prior years. Yes, there were some changes in terms of increased standard deduction if you're over age 65, elimination of taxes on certain portions of overtime, those types of things, and tips as well. But at the end of the day, a lot of it was just to continue on with the same tax rates as what we saw. August bought, I guess, a sort of a resurrection of the tariff issue, because if you remember, in April, it was just a 90-day suspension. So once the 90 days was up, then the tariff stuff came back into the forefront in terms of the headlines. Taylor Swift got engaged in August, so there was that as well. And then in September, a lot of continuing trade conversation. And at the end of the day, ongoing discussion about AI. So the tariff and the AI stuff really were kind of, as we kind of work through these headlines for 2025, really were kind of the big dominant themes for the year. Of course, in September, that's when the Fed started cutting rates. So clearly, a little concern over inflation, a little concern over the economy in terms of the labor data, things like that. They started cutting rates in February, so they cut them by 0.25%. And then, lo and behold, here comes October, and you had a government shutdown. So the government shutdown actually lasted all the way until November. I think that wound up being like the longest shutdown on history or something like that. So, but it was, pretty significant. Meanwhile, the Fed, which had started cutting rates in September, they cut again in October in the midst of kind of all of that government shutdown. There was a peace agreement reached in Gaza. I always question whether it was, whether that peace agreement is actually going to hold. But in October, there was that peace agreement that led to at least a temporary ceasefire in that neck of the woods. Bitcoin went up about $126 up to $126,000 in early October, only to drop by about 30% down to $90,000 per coin within basically a 30-day period of time. So volatile asset classes perform just like that, is that you can have some pretty significant swings within a very short period of time. That's why when it comes to investing real money for real people, we kind of stay away from that stuff. But the Fed cut rates again in October against that backdrop. The government shutdown ended in November. And then we fast forward to December, where once again the Federal Reserve cut rates earlier this month by another 25 basis points. And there you have it. The headlines of 2025, certainly all over the map. What you might forget is that there were significant market declines that occurred during the course of this year. There were significant wars and conflicts that occurred during the course of this year. There was significant economic uncertainty that occurred during the course of this year. I wish I could tell you that that was unique to this year, but it wasn't. It's pretty much that way every year. So if you're getting hung up on these headlines as they occur on a daily basis, and that is impacting your ability to make good financial decisions, maybe 2026 is the year that you reach out to us at Nelson Financial Planning and help to get some better perspective on the host of things that I am sure will happen during the course of 2026. The reality is, a year from now, we're going to be doing the last podcast, the last radio show of the year 2026. We'll get the privilege of recapping the headlines of 2026 then, as we do on the last episode of the year for every show. And, be curious to see what they all are. One thing I can tell you, though, is that at the end of the day, it's so important to be consistent, be diversified, and maintain perspective no matter what the headlines are. My goodness, certainly 2025 showed a host of headlines that we'll probably see a host of headlines next year as well. With that, we're going to take a break and continue the conversation here on Dollars and Cents with Joel Garris of Nelson Financial Planning. Welcome back to the program. This course is Dollars and Cents, where we've been helping people make sense out of all of those different decisions involving their dollars all the way back since 1984. That's when our firm, Nelson Financial Planning, started all those many years ago. We continue the tradition today. If you missed the first half of the program, we did our normal year-end headline recap, which actually means that next week is our Fearless Forecast. Now, I have to be honest, normally I always like to do the Fearless Forecast before there is any trading day in the new year, because sometimes if the trading day is really good, that may set the tone for the year, all of those kinds of things. Well, as the calendar falls, folks, it's just kind of tricky to do that, right? You still have 3 more trading days in the year 2025, Monday, Tuesday, Wednesday. Thursday, obviously, markets close, but then Friday, they open up and it'll be January the 2nd. So next week's Fearless Forecast will have a little asterisk in it as a result of sort of that one trading day that will have happened already in the year 2026. But if you're curious to see how we did on our Fearless Forecast for the year, stay tuned for next week's program. For those of you who listened to the program a year ago, you know that pretty close. Might have undercut it even a little bit more than expected for this year. But I guess better to under-promise, although that wasn't really a promise because it was just kind of a forecast thing and just sort of a guess. But better to under-promise than and over-deliver than the other way around, right? So anyway, so stay tuned for that for next week. We'll crank through the Fearless Forecast, but it will have the asterisk because we do have one trading day that will sneak in there on Friday, January the 2nd. Hard to believe that seems like these Fearless Forecast shows like every week, but it really is every year. As we reflect on 2025 and think about all of those headlines that happened, certainly AI was the dominant sort of theme, or one of the dominant themes to the year. Time Magazine, for example, named the architects of AI as their sort of person of the year. So we thought it would be interesting to just kind of, talk through, am I going to be here next year, or will AI like totally replace me? I mean, that could be a totally different kind of conversation where it's like this hologram or whatever that is doing the radio program. And so I thought it'd be fun to kind of talk about that because that's clearly been a topic that has dominated all of the headlines over the course of the 2025 year and been a dominant theme and a dominant driver for the markets as well. So what's the future look like? Are we better off with robots or real people? Well, certainly there's a lot of issues on both sides of the equation. And so we would kind of talk it through a little bit about, certainly AI, powerful, increases productivity, increases efficiency, but it does come with some serious risks that we think will limit its effectiveness to do this radio show and podcasts in future years, meaning that we're not ready to get replaced just yet. Certainly AI can do a lot of tremendous things. If you've ever used it, played around with it, I mean, it can sort, summarize, and crunch enormous amounts of data within a very, very short period of time. From a financial perspective, certainly you see it getting used more in terms of sort of optimizing portfolios, which we think is a good use of the tool, whereby able to kind of look at what the overall investment allocation is a little bit more effectively effectively in terms of a portfolio, and then correspondingly to be able to use that to help give insight as to whether a portfolio needs to be rebalanced along the way. Of course, as with anything, it's a computer program, it's an algorithm, and there can certainly be some inherent biases in kind of how that algorithm gets created. If you think of it like this, like one of the things that we've talked about over the years is sort of these target date funds, right? And so these target date funds are all the rage throughout the retirement plan level, particularly the employer retirement plans. And, if you ever kind of looked and drilled down into them, what you see is all of the target date funds that are like out more than 20 years or 30 years from now. If you go out from that point and then forward, they all look basically exactly the same and deliver exactly the same performance. And when you think of it, they probably shouldn't, because, if they're supposed to be different, then they should be different. But a lot of what happens there is based on the parameters that are inputted into creating those target date funds. Well, think of AI in much the same capacity, because ultimately AI is going to be based on kind of what that data is, what the guardrails are, what the parameters are that have been put into that particular type of programming. And of course, with programming, there's not really any clear oversight for AI-driven advice, certainly no regulatory authority over it. That can certainly lead to a lot of errors that can occur from an investing perspective on a personal basis, not to mention a host of conflicts of interest as well. So definitely some downside, if you will, in terms of AI ultimately kind of shifting and taking over some of these items, and then of course the privacy concerns, right? Can't forget about those, obviously, and putting a lot of your personal information, if you're using that, for retirement advice. I mean, who knows? AI may just tell you to buy crypto and move to Mars, which I'm not sure that's going to be the best possible option. Artificial intelligence also, I think, we think about its role. It certainly falls short when it comes to human emotions, right? Because it's not actually a human. Like, AI probably can't really effectively calm you down and give perspective when the headlines in the markets may be in a fall. And it's those kinds of things where you need a fellow human to help provide that empathy, to help provide that perspective in order to navigate through those types of declines. And we think that that's a major shortcoming of AI, combined with the fact that, I don't know about you, but the older I get, the more I realize that a lot in life is not black and white. There's a whole lot of shades of gray. And I think, as a human being, we're able to kind of identify and relate to those shades of gray that I think impact on each one of our decisions on a daily basis as life moves forward. It has a tendency that it can get complex at any given point in time, whether that's through marriage, divorce, death, any of those kinds of things. A lot more that goes on that I don't think AI is prepared to deal with, along with that behavioral coaching that at the end of the day provides financial perspective. Because the reality is that most financial mistakes are emotionally based. They're not mathematically based. When we see how investors perform over time, a lot of that is kind of, a lot of those issues are kind of more emotional, not necessarily mathematical. So we're proud to report that we believe that we will still be doing the show in person, and it won't be AI. We think that the personalized advice that you get from a human being will always kind of trump the numbers, if you will, of algorithm. And then, of course, the reality is you can't call an algorithm when you're worried about things. You can call us. We have actually live people that will still answer the phones every day. So live humans, not computers, not bots, any of that kind of thing. AI won't go out and get a cup of coffee with you and talk about your grandkids, right? So am I going to get replaced by AI, even though it's been a dominant theme for 2025? I think the answer is no, not anytime soon. It's certainly a tool, but I wouldn't necessarily consider it a trusted partner like we seek to do every day at Nelson Financial Planning, where we help people navigate through all of life's ups and downs beyond just the finances. So I thought we would just kind of talk about that, seeing how AI is certainly one of the major dominant themes for 2025. We're going to continue on the program after these messages. This is Joel Garris of Nelson Financial Planning. So we certainly want to take a moment and wish you a very, very happy new year. This is our last program for 2025 here on Dollars and Cents. Hard to believe the year went by as quickly as it did. We hope you've enjoyed the program so far. Kind of interesting to always recap those headlines, which is one of those things that we like to do at the end of year show. Certainly have done that in years past. The point of that is to bring some perspective. You know, you forget, for example, this year, the markets in the first quarter were down like over 15%. And certainly the year started out pretty rough when it came to conversations about tariffs and the uncertainty that created in the economy and the markets. But then, lo and behold, life happens, things changed, and the markets fully recovered by the time you get to the middle of the year. Of course, by the middle of the year, we were also dropping bombs on Iran as well. So you had your normal, kind of smorgasbord of economic events, war events, headline events, market events. All of those things happened. Once again, demonstrating the need to continue to be consistent, because at any given point in time, those headlines that we talked about, that we recapped for the year in the first half of the program, could have easily been the one that caused you to make a financial decision that was based more on emotion, not on fact. And at the end of the day, that could have really impacted what your financial results were for this year. Also, the year 2025 marked perhaps one of the most famous investors' retirement. That, of course, is Warren Buffett. So we thought we would conclude the program with some thoughts as to what Warren Buffett would say, particularly as we think about the year 2025, and most importantly, look ahead to 2026 as well. One of the things that Buffett always emphasized is that the biggest threat to one's financial success isn't necessarily the market. It is, in fact, their own behavior. One of Buffett's most famous quotes: the most important quality for an investor is temperament, not intellect. Kind of an interesting way to think of it, right? So let's talk about how to kind of avoid those costly mistakes as we think about the year ahead. And then, of course, think back to everything that happened in 2025 as well. So Buffett, constantly is reminding people about trying to avoid investing on an emotional basis and following the crowd. One of the most important things that he says is that, oftentimes people get swept up in trends, panic during downturns, and make decisions based on powerful emotions like fear or greed, not necessarily the fundamentals. And when we think about that from a behavioral perspective, that's exactly what we see, unfortunately, on a regular basis. That is generally tied to sort of one of a few different biases that are out there in terms of kind of how we act as human beings. First one would be sort of, kind of spending too much, overspending. Second one is the fear of loss, so this concept of loss aversion. And then third is kind of going with the herd, or kind of going on the bandwagon, so that herd mentality. One of the biggest reasons why when we wrote our book, Next Gen Dollars and Cents, and then followed it up this year with a companion workbook that at the end of the day, the very first chapter is about human behavior, because that's a big part of how your investment results are going to go, is based on those emotions. And ultimately, being in the best possible shape for retirement, many people are not, simply because they are spending beyond their means, or chasing the next way to spend money because everybody sort of has it. To borrow a quote from Warren Buffett, if you buy things you do not need, soon you will have to sell things you need. And so some great tips to avoid kind of that concept is to use the 24-hour rule to before big purchases. That's one of the things you've heard about us talk about on the program before. What that means is basically you take 24 hours. You say, okay, I'm going to purchase this. Take 24 hours then before you actually pull the trigger, and really evaluate whether you actually need to purchase that item or not. Make sure you automate the savings, build up the emergency savings. All of that is crucially important. And then lastly, just sort of track spending. That's a great way to prevent overspending, is by tracking the spending. Then you can see, hey, here's how I actually spent the money. And by looking at how you're spending the money, it may be a bit more eye-opening in terms of where that money is going. And so if you do that, then that might make you better prepared to start to save money and prepare better for retirement. Certainly fear of losing money is a dominant trend that leads to sort of panic selling and avoiding investments altogether. Another Buffett quote is to be fearful when others are greedy, right? And greedy when others are fearful. So you got to make sure you're focusing on those long-term goals and not just the daily headlines. Use diversification to really help reduce the risk, reduce down the potential of any investment to kind of fluctuate up or down. And then lastly, to think about more about, kind of that herd mentality, that notion of jumping into things just because everybody else is doing it, sort of going with the hot option, if you will. Another Buffett quote, and so we're leaning heavily on that because obviously this year marked his retirement. So another one of the themes for the year that we saw play out. Buffett's quote on this one is, "The stock market is designed to transfer money from the active to the patient." Isn't that interesting? So bottom line, make sure you're sticking to your financial plan. If you had problems with that during the course of this past year, we encourage you to get in touch with us in the new year. We are actually in the office this week because the markets are open. So why wouldn't we be in the office? So if you reach out to us courtesy of our website or at nelsonfinancialplanning.com, or give us a call at the office, 407-629-6477. Be more than happy to get your new year off correctly by setting up a conversation with one of our certified financial fiduciaries at Nelson Financial Planning. Because the reality is, in order to avoid that herd mentality, you've really got to kind of stick to your plan and make sure that you understand and sort of know what you own. That was perhaps one of the sort of the sub-themes that we were talking a lot about this past year on the radio program, because so much new product is getting rolled out there and is sort of getting pushed onto the investing public, whether it's the vast amount of ETFs, specifically ETFs that also are leveraged or borrowed, using borrowed money to sort of juice returns, the push of private credit, private equity into the general investing public. We saw a big trend this year of that sort of happening. And the reality is that it really creates a barrier for you to truly know what it is that you own. So we talked a lot about that on programs during the course of this year to just get that understanding. The reality is that ultimately 2025, if you look at where the markets wound up being a decent year. We hope that it was a decent year for you as well. We'll be back next week on the program where we will do our Fearless Forecast episode, as we like to do at the beginning of every year. Usually we try and stick it in at the end of the year before the markets have had any sort of trading performance, but unfortunately, as the calendar falls, you got Friday in there. This coming Friday will actually be the first trading day of the year 2026. But regardless, we will give our Fearless Forecast. Also, let you know how we did on the one for 2025. As we hinted to earlier, we were pretty good on it. Maybe under-promised, or I guess under-forecasted, if you will, in terms of how the markets were performing during the course of the year. So we hope you enjoyed the program, sort of a recap of 2025, the year that was. We will look forward to having you join us in the new year, 2026, right around the corner. Have a great New Year's, and we will be back next week here on Dollars and Cents with Joel Garris of Nelson Financial Planning.